It's always a busy week in the markets when it's the first week of the month, lots of economic data releases and various other things, and this week is no different. Now, one of the key events of the week is coming up tomorrow, that's Thursday, and it's the Bank of England announcement following their monetary policy meeting. So let's take a quick look at that general situation. And for me, when it comes to the UK markets, other than the fact that I live in the UK, is GBP, the pound. And the pound recently has been experiencing its best rally against the US dollar since 2012. And there are various reasons for this, some that are more obvious than others. But part of the pound's strength actually comes on the back of one of the most successful vaccine rollout programs in the world, which is surprising that the UK government has finally got something right in this whole pandemic mess that they've been dealing with. So far, the UK has vaccinated 15 out of every 100 people. And just for comparison, if we look at the US, they vaccinated 10 out of every 100, and so far the EU has only vaccinated 3 out of every 100. So they're quite far behind. Hopefully they'll be able to catch up and pick up the pace a bit. Now, this is a major turning point for the UK. The UK took some of the hardest hits during the pandemic, so the successful vaccine rollout now increases the likelihood of a quicker economic recovery than many people expected, and than many other countries that have been hitting stumbling blocks recently. However, despite that success, the expectations for the Bank of England's update are that it's going to be showing that a rebound is unlikely to come in the first half of this year, which isn't exactly surprising considering the UK is still in a lockdown. So the downgrades to the economic forecast are likely to hit Q1 and Q2, but even so, there's no expectation right now for any additional stimulus. At the moment, it seems that the current lockdown should come to an end in early March, but as new strains of the virus emerge, it could be that one of them ends up threatening that end date. So since this is the UK's third full lockdown, the government is holding back from guaranteeing the end date, and I'm sure they'll extend it if they have to. So the medium to long term will probably be the main focus of the monetary policy meeting as they look towards economic growth later in the year and staying on track towards their 2% inflation rate target. Now, one of the risks to the rally in the pound and to UK related markets is the possibility of negative rates. The bank has been conducting a consultation which is also due to be released on Thursday. However, I think it's widely accepted that negative rates are not likely to happen this year. After all, alongside a successful vaccination program, the government has relied on extensive fiscal stimulus, which has also supported the economy. And we've had that lingering uncertainty about the Brexit deal pretty much gone, although there are still some uncertainties related to that whole situation, but we don't have to go through that drama like we had at the end of last year. So if the central bank didn't use negative rates during the lows of the pandemic or the height of uncertainty, it's unlikely they're going to use them now as the medium to long-term outlook begins to look more positive. But despite this, we do need to keep in mind that although there's light at the end of the tunnel, the pandemic isn't over yet, and more strains of the virus keep being discovered all the time. The most recent ones being, I think, the African strain, wasn't there? The Kent strain, I don't know, you see these fancy graphics on the TV all the time. So, it seems so far we've been lucky that the vaccines are still effective against these new variants, but that may not always be the case. So if variants develop and become more deadly, they spread more quickly, or aren't covered by the vaccines, then I'm sure it could be the case that lockdowns are extended, and therefore that recovery that we're expecting could be threatened, potentially being therefore an indicator that negative rates could come. But for now, that's not really looking very likely. So instead, I think it will be a relatively uneventful Bank of England announcement tomorrow, and hopefully that means that we can have more sort of relative steady state markets, particularly with the pound. It's been struggling in that area at the moment against the US dollar, but it's still on the rise. It's still in that bullish trend. So let's see what happens. Let me know your thoughts in the comment section down below. Don't forget to hit that like button to help support the channel, and subscribe if you haven't already. Thanks for watching. See you in the next one.